Hello, today is Thursday, the 14th of August, 2008. This is Brian Shannon from Alpha Trends, and the market has closed, and we had an update today. It's been up, down for a while, but clearly over the last month and a half or so, the path of least resistance has been higher. And I'm still reluctant to say all clear because we've got this declining 50-day moving average that the market is doing this battle with. It's good to see that we did recapture that 129 level, so I think that allows us to breathe a little bit easier here in the short term. And really, it comes down to stock picking and finding the right ideas in this type of environment. If we look at let's take a look at the hourly time frame. This gives us just a little bit better perspective than that half-hour chart. You can see here, this is that 129 level that had been the important level of resistance. And I said basically closing below that level, or really down to 128.5, then that's where we would probably see more problems from this market. But the market, we've been looking at these little trend lines in here, kind of broke there this morning, but this is the more important trend line, obviously. And the only reason really for concern here on the S&P 500 is because we're possibly going to making a lower high. You can't call it that yet because we're still we have made higher lows, and this could just be halfway up towards the next higher high. So don't read into that too much here. We do see that on the 10-minute time frame, this trend line was broken briefly on the open, but buyers came in quickly. We can see that on the 1-minute time frame. The buyers came in quickly, struggled around that daily VWAP for about the first half hour, and then buyers took control once again and held control for the entire session. So it was a constructive day, obviously, with a 0.76% gain. You can't call it anything but positive. And the weekly time frame still is the main reason that I don't think you can just aggressively go in there and buy. And people, sometimes I get an email that says, hey, you never seem to want to commit here, because on the downtrends, those short squeeze rallies are so quick, and in the counter trend rallies like we're seeing right now, we get these deep pullbacks that make you kind of doubt what's going on. So you have to focus on what's working now rather than trying to predict where we'll be a month from now or 3 months from now. That's anyone's guess, and basically that's what it amounts to, is a guess, because no one has a crystal ball and you can't see from here what's going to happen. I would like to see, and again, what does that count for? Really not much of anything. The market doesn't care what I think, but I'd like to see more consolidation in here, see this 50-day moving average flatten out, and know that we can really hold above these levels, maybe come down and test the 126 and really hold above those levels before we can build a stronger base for perhaps a year-end rally. So it's supposedly a bullish year and bullish time of year with the election coming up, but seems like the market has other ideas. So you just have to continue to trade it, and there's fantastic trading opportunities. If you come in cash and you see it starting to rally like this, you got to get long and take advantage. So that's where your odds are, is in these shorter term moves, while we have this real large volatility that continues to be in this market. The USO we saw yesterday was looking like it's trying to find some support near this between the 30 and 40 week moving average. The daily downtrend, I said, was still intact. Nothing here to suggest that this was interrupted. We were looking at the 10-minute time frame. I said that if we were going to recover in the oil market, it needed to hold above 93. But with a declining 5-day moving average, you can't really trust these moves, just as we saw back in late July. We saw it get above that 5-day moving average, but as long as the 5-day moving average is declining, remain skeptical that the move will rally, so that the move will be able to hold. So it looks like that the support is down near $91 for oil. Breaking below that could lead to the next leg lower, which again, as equity investors, that would be a good thing for furthering the bullish move here in equities, but as I said yesterday, I think this thing needs to just consolidate a little bit more through time in here. A lot of people trying to pick the bottom, and again, the bottoms. Look at the UNG, another low close today. New closing low since back in these levels since. Late January and early February, it hasn't closed this low. This market has just been completely destroyed, and no signs yet of any bottom in the natural gas either. We've still got a declining 5-day moving average, so remain skeptical of any rally attempt in there, and put your money to work in something where it's actually working. The XLF again continues to be. Probably, I think we can look at this as a range-bound market of basically, 1975 up to about 23 or so. And yesterday we saw that the market broke below this, what was looking like support here at 21. It's back up above that level, but declining 5-day moving average in here. So the real important level, if the market breaks below this 1975, then we could see further lows. But I think that this is a market that is clearly showing signs of just sideways action, and again, best left alone. The Russell 2000 closed at $75.30. It closed December 31st at $75.92. So this thing's only about 62 cents or less than 1% away from closing positive for the year. We're seeing this nice consolidation, more strength in here again today, looking like we're headed for these highs at just above 76 that it closed at. Just above that. It was basically the only day that for this year that the Russell 2000 closed positive on the year, and we know what happened since then. But we're clearly seeing a much more constructive pattern here. The 50-day moving average has flattened out, and now we've got some what appear to be decent levels of support below us down here near the 73.25 level, and then of course the 72.5 is a more major level that should provide support if we see pullback in here. But a little bit of resistance at 75, 75.70 or so, and otherwise it's this market is looking the best. If we back it up to the weekly time frame, though, this is a very important level, this 75 to 76 dollar level. It's extended that it's come up here, but maybe if it can hold on, then we can see continued upside in here. If you look at the any downtrend line that you want to draw off any of these highs, then it's held up. So the Russell 2000 continues to be where the buyers really are focusing on, it seems, and just behind it is the Nasdaq 100. This market. Let's start with that 10-minute time frame. We saw yesterday that the market pulled back right onto that rising 5-day moving average. Then it jumped above the daily VWAP yesterday, right here at this point, and now we've got today we saw another bullish day for this market. It closed up at 48.30. Let me just change the scaling here to get a little bit clearer picture. If we look at the Fibonacci once again off of here, just to stress that we're closing above that 61.8% retracement of the latest sell-off from here to there. So from the high here on June 5th down to the low on July 15th, we've retraced 2/3 of that move right now, and the market holds on. So you got to be impressed by that. Let's see if these trend lines come into place, but short term, the buyers are clearly in control. You want to trade intermediate term in the direction of that rising in the direction of the 5-day moving average. And since it took out that 46.10 level, 46.20, and then that level was tested, the buyers have been firmly in control here, driving this market higher, pulling back to the rising 5-day moving average and thrusting higher once again. Tomorrow we've got earnings. We've got options expiration. I'll be teaching a class, details at marketwise.com, so you can sign up for it there, and don't expect money updates during the day tomorrow because of that. Thanks.